Hey guys, it's James, and I wanted to compare one of the most popular income funds, QYLD, with JEPI. JEPI is JP Morgan's income ETF. They offer a fairly decent growth with a fairly decent dividend yield, and I wanted to compare the two funds on my fund versus fund future value calculator. But first, let's head over to the websites and just check out some of the numbers for QYLD and JEPI. Here we are on the landing page for QYLD. QYLD is owned by Global X, and it is one of the high income fund ETFs. A few of the values I'd like to highlight here is the fund's inception date was in 2013. The expense ratio is 0.6. The 12-month trailing yield is 14.92, and their current distribution yield is sitting at around 13.53. Their current average annualized yield, and this includes with dividends reinvested, which seems kind of contrary because the purpose of this fund is for an income fund, but this is what they're highlighting here. Their annualized return since inception has been about 8.33% with dividends reinvested. Let's head over to JP Morgan's landing page for their income fund, JEPI, J-E-P-I, and a few of the values I would like to highlight on their page is the current NAV price or net asset value price is sitting around $58. They too, like QYLD, will perform option strategies to be able to generate premiums and then pay that back to you in a dividend. So just a few things to highlight here on their page. They have two portfolio managers, and combined with over 50 years of experience in the fundamental equity investing and options strategies, they employ a bottom-up research process with stock selection based on our proprietary risk-adjusted stock ranks. Options overlay allows for income generation that flexibly adjusts with the market. Their current stated 12-month rolling yield, which I would believe would be their dividend yield, would be a 6.99%, and their yield or dividend yield is in the top 10% of all U.S. registered open-end funds and ETFs, meaning their overall dividend yield is one of the highest ones out there for a decent, very good fund. And they are competitively priced versus peers with a very nice 0.35%, where a lot of these other income funds are sitting around 0.6 to 0.7% expense ratio. Another thing I want to point out that the inception date of this fund was only May 20th of 2020, so we are coming up close to 2 years for this fund to being active. And then we come down here, you get to see the two portfolio managers. This fund itself has only been managed for close to 2 years. And then down here, they also have the dividend yield as of January 31st, 2022 as 8.86%. Let's go over to an independent website like Seeking Alpha and compare QYLD and JEPI. Just a few of the numbers that we're going to use for our comparison calculation. QYLD's NAV price right now, today, at the close of the day, is at $19.50. Their forward yield, which is an estimate of the next 12 months, is going to be sitting around 12.30%. Their expense ratio is 0.60. I also wanted to show here, since we are going to calculate the future value of this fund, we're going to try to determine an accurate CAGR number or cumulative annual growth return. Now, it's pretty tricky for QYLD since it's pretty much all downhill since the start of the fund, but they do pay you a fairly decent, fairly high dividend yield. So at the start of the fund was December 2013, and they started around $25 to $26 at the start of the fund. And ever since then, the fund has not really been able to catch back up and exceed the starting value. So what we're going to do is determine a CAGR or a straight line value from about January 2014, about 8 years ago, all the way to January 2022. So if we take those two numbers of about $25 all the way down to January of 22 to about $20 at thecalculatorsite.com, with the starting value of about 25 and the ending value of about 20, over a period of 8 years, we come up with a CAGR of about a negative 2.75%. So here is JEPI's Seeking Alpha page. Their NAV price is sitting at $58.33. We're going to use this number right here. The yield is 7.25%, the trailing 12-month yield. So that's the average of the last 12 months. And then their expense ratio is sitting at 0.35%. We'll take a look at their advanced chart as well. Click the All button. So we're going to develop a CAGR number just for a simple 21 to 22 month period. So if we started with about $50 to $51 all the way up to about $58 currently as of year to date here in 2022. So we're going to do a starting value of 50, an ending value of about 58 with a total of about 22 months. That gives us a CAGR of about 8.43. So we will use this number right here when we're determining the future value of JEPI. I'd also like to do a split screen here and show you the difference between the holdings of QYLD and JEPI. We did this for another NASDAQ 100 income fund. That would be NUSI, Nationwide's Risk Managed Income Fund. And we saw that the holdings were almost identical between QYLD and NUSI. However, you see the difference here with JEPI. They are spread out a little bit more evenly between all the 11 different sectors in the market compared to QYLD, where they are the NASDAQ 100 or 50% technology sector, where over here, the first 4 funds, you have industrials, consumer defense, healthcare, financials, all fairly close, 12%. And then JEPI, their top 10 holdings are, honestly, I'm not really sure. I saw this on JEPI's website, and I would love for somebody in the comments, if you know what this is, SPX underscore and these various different numbers. If you know what that is and can explain it to us, that would be awesome. I tried to find it out on JEPI's website, and they really didn't do a good job of explaining it. So before we go over to my future value calculator, I wanted to show you a different calculator that actually tells you what the past would have been if you compared these two funds. If you invested an initial $10,000 in QYLD against JEPI. This might look a little complicated if you have not used it before, but they do have explanations with these little examples right here. Pretty self-explanatory. We're going to include year to date, and this year doesn't matter. It's just going to go to the most recent fund starts date, which would be May of 2020 for JEPI, all the way up until year to date. A $10,000 starting investment with no monthly additions. We'll stay out of that. No rebalancing. See the difference between the reinvestment of dividends and not reinvesting dividends. And then we would like to display the income and then come down here and analyze the portfolio. And we see in the red here is JEPI, and JEPI does outperform QYLD as we thought, with a $10,000 investment and dividends reinvested. The overall CAGR for reinvesting dividends for JEPI is about 16%, and that is taking from December 2020 numbers. I'm not sure why it did not go back all the way to May of 2020, but it just might be the amount of data that this calculator has obtained so far. And the overall CAGR for QYLD for that time period is 4.05% with dividends reinvested. So let's check out to see what it would be like without dividends reinvested, because if you do recall, these funds, their purpose is an income fund, so you ideally would be taking the dividends away from the investment. And when you do that, starting with $10,000, December 31st of 2020, so about a year and 2 months with the current market conditions, QYLD's CAGR is a negative 8.25% as you pull the dividends out, and JEPI actually has a fairly decent positive CAGR with the dividends pulled out. You're looking at JEPI's value after about a year and 2 months would be $10,900, and QYLD's value would be $9,100 with these market conditions without dividends reinvested. And if you take a look at the actual income or portfolio income you would have received in 2021, QYLD in the blue would have your $10,000 investment would have gotten you $1,250 over the course of the year, and JEPI would have gotten you $747. So here is my fund versus fund calculator calculating the future value over the course of 10 years. So the current fund share price is already put in here. If you recall from the fund website pages, I had said we would be using some of the numbers we were looking at, and I've already put them in here. QYLD is sitting at $19.50 today at a 12.13% dividend yield with a 0.6% expense ratio. JEPI is sitting at $58.31, a dividend yield of 7.25, and this is actually 0.35, and that is included in the calculation. So an annual dividend payment for one share of JEPI would be $4.23 compared to $2.37 for QYLD. Now, if you recall the CAGR calculations that we were doing, so the overall number that we came to for QYLD was negative 2.61. Remember, that was the 8-year CAGR so far for the current NAV price. And with JEPI, we came to the conclusion, again, the history is not very long, so take this with a grain of salt. The CAGR I calculated to be about 8.77, and that is the figure I am going with for the next 10 years. I'll play around with this and see if we can be a little bit more conservative and a little bit more bullish on QYLD. But with the current numbers that we have right now, after 1 year, you are looking at $10,800 with QYLD. And after 1 year with JEPI, you're looking at $1,600 addition. And that is with dividends reinvested. After a 10-year period in both funds, you can see that JEPI extremely outperforms QYLD. That 12% dividend yield does not even come close to make up for all of the negative growth for QYLD. So let's go ahead and play around with these numbers. Let's say QYLD is able to change things around and they start to receive a positive CAGR. Let's say they receive a 1% CAGR over the course of the next few years. That brings QYLD slightly closer to JEPI. However, if JEPI maintains their current CAGR growth rate, they're going to continue to outperform JEPI. It's not until 2%, 3%, it's not until about 4% CAGR, meaning QYLD would not cross over or outperform JEPI until a 4% CAGR growth rate with the current dividend yield status. So let's bring this back down to the, I believe it was about a negative 2.5. Let's say JEPI was started to underperform its past year's performance. It would have to drop down to about a 3% or 2% CAGR to be able to match the return for QYLD with dividends reinvested. So that is what you got. If we go back to the original numbers, about 8.7 and negative 2.5, JEPI is a much more favorable fund when it comes to overall growth with dividends reinvested. But remember, these funds are purely for income funds. But remember, these funds were created to be able to have income, and QYLD does outperform JEPI when it comes to purely the income category. Let's take a look over here at the monthly dividend and annual dividend boxes to be able to read these. This is saying for a $750 or $10,000 to $5,000 monthly dividend, you would need this much in each of these different ETFs. So you would need close to $500,000 in QYLD to be able to receive a $5,000 a month dividend in simply QYLD, and then you would need this much for JEPI. Coming down here to the annual dividends, you would, for $50,000 in annual dividends, you would need $412,000 of QYLD, and close to 700,000 in JEPI. Head down into the comments and let me know what you thought of my analysis. If you want access to this future value calculator, it is over on my Patreon page. And with that, thanks for watching.